All right, welcome back to Robinhood Stock Market Watchlist Group. My name is Carlos. Today is Sunday, October 2nd, 2022. We are a stock market group that have meetings every Sunday morning. So we like to talk about many different things that are related to it, as well as education and strategies, information, and as well as looking ahead the following week or few weeks, because it's really important that we always know what's going to happen before it happens. And so I remember many years ago being new that always kind of relying on the news for information. But a lot of times when we do that, it's the market has already reacted to it, and things are too late. And so, but as we get more into this meeting, we're going to show how to really dive into knowing what's going to happen before it happens, because everything's scheduled. There's so many things that are scheduled that will provide either bearish characteristics or bullish characteristics, and that is so extremely important because it has the biggest impact on the stock market, and then the news reacts to it. So it's only wise to really know these things before it hits the news, because the pro traders have the saying, buy on rumors, sell on news. So the idea is to be able to own or have contracts or shares of something before it hits the news. That way you can react to it. And so, but one of the training things that we needed to go over is moving averages. Moving averages is our one of our important tools that we use that provides us our buying and selling signals. Without these, we would be trading blindly. We're using the hope system. We're throwing money at something and hoping that it sticks, but we really don't know when to buy and when to sell when we're using the hope system. And so we need as someone that's new to the stock market, you need a better system. It's time to level up and step up your game a little bit. And so we're going to use a desktop application called Webull. Webull is a free application, just like Robinhood and many others. But Webull is also available in your app store. It's Webull. And so, but not only do they offer many different types of applications for like the Apple or the Androids, but also a desktop application. That way you can utilize both features. Like if you wanted to maybe execute orders using your handheld while watching it on the big screen. That is a wonderful strategy. That way you can always keep your eye on the ball kind of thing. And so I'm going to switch my screens over to Webull here. Give me one moment here while I do that. This is a live meeting, so the participants, you're going to have to switch your windows here. Screens, so you may have been disconnected from the screen. You'll have to just go in and reconnect to the new app screen that I have shared here. And so looking at I have the two screens here basically. The one on the let me change it here really quick. We'll just do the one for now. But this is Apple. Apple is a very popular traded share, as well as a stock option. Right now we're looking at a daily chart, so every notch is 1 day, or we can always change it to time, so we can go 1 minute, 5 minutes, 30 minutes, 1 hour, and then our daily chart. And so when we're seeing so the main line, this is the price line. Then we utilize 3 moving average lines for a couple different reasons. because it kind of provides a high risk, medium risk, and a low risk. So if the price line cuts through, if it's going down, if it cuts through the first line, then that means, you know, there's a 25% chance it's going to go up, and a 75% chance it's going to keep going down because it's trending down. If it cuts through the second line, then that means that there's a 50% chance it's going to keep going up, and 50% chance it's going to keep going down. Once it cuts through the third line, then that means there's a 75% chance it could keep going up, and a 25% chance it can keep going down. Now, the last and final signal is this crossover signal. That is the very, 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 very important key right there. And like, again, that is the last signal letting us know that it is continuing to go that direction. And we can kind of see that in the MACD. Now, both the moving average indicator and the MACD are the two most highly used indicators with the stock market. And they're used by the most successful investors and traders. And if you're not using them yet, like I said, it's extremely important that you start. And to be able to get different results, you have to try something different. Otherwise, you keep doing the same thing, you're going to get the same results. And so the MACD at times can provide you information of what's going to happen before it happens. And so we see that the crossover is right here. Now, again, these are two moving average not price lines, but they're lagging price lines. So they don't move as quick as the normal price lines, but one is slower, one is faster. And these colored bars represent a gap distance that let us know kind of the gap distance between whether it's uptrending or downtrending, so we can easily identify the crossover, especially if it turns red right here, even though it hasn't crossed over or done anything yet up here with the price line. But the MACD is letting us know, hey, you know, get ready, you know, it's going to start downtrending, you know, be prepared. And then boom, it did about a week later. And so and then during the price line right here, as it cuts through, and all three moving average lines and the moving average lines crosses over each other. This is our last and final signal, letting us know it's downtrending until further notice. Now, it could provide false signals. It could kind of, you know, psych you out a little bit, but you got to stay focused. If it goes up and cuts through all three, I mean, you may panic a little bit, but you got to wait because it's false. It's just trying to scare investors. And so we got to wait for that final crossover signal. And the MACD isn't really saying, you know, just it's basically saying hold on, just, you know, it's not saying to, you know, it's not, you know, crossing over yet, and then it falls right back down and continues its downtrend until further notice. Because we don't know, you know, how far it's going to go down or for how long, but it will provide us these signals to be able to get in and to get out. And the daily chart makes it much easier for a lot of investors and traders that are fairly new to learning, because it's a lot more predictable than it would be using a day trading or swing trading. But for day trading, you know, it really depends on what you're doing. If you're wanting to day trade, you know, penny stocks, usually it's better to trade during pre-market. If you're you know, day trading options, well, you have no choice but to trade during the market hours. So it's important to know that during the market hours, the first hour and the last hour are the most important times of the day. And so usually you want to use a blend of two screens when you're day trading. And so one screen is usually best to be in a 5-minute chart. And while the other screen is best defaulted to a 1-minute screen. If I can, there we go. So after the market opens, you usually want to focus on kind of like on the 1 minute screen, because you know, it can be pretty volatile, but we also want to kind of compare it with the 5 minute chart. That way we can get in and get out. It depends on what's going on, what you're holding, whether it's calls or puts or both. I usually recommend straddling. Straddling in the stock options world is when you have both calls and puts, and so a lot of people aren't always sure exactly, you know, when to sell, even though the best time to buy is about 5 to 10 minutes before close, because we're avoiding the time depreciation throughout the middle of the day of no activity and just time decay. And so if we buy 5 to 10 minutes before close, we can sell it the next morning and make it seem like it's day trading, but it's really considered swing trading. So it's a way to kind of you know, kink the system a little bit. That way you're not using your day trades. You know, where most people there are limited to 3 day trades, you know, per 5-day trading period, or for every week, with accounts with less than $25,000. And so the best way around that is just to buy your straddles, your calls and puts, 5 to 10 minutes before close, and then let's sell them the next day. Now we could sell them, you know, usually you want to sell them within that first hour. If you start holding it beyond that first hour, you know, we start losing a lot of you know, activity at times, and so the market can kind of range, kind of flat, you know, from side to side, and if you keep holding it, a stock option, it's just going to depreciate. And so in a situation like this, where we can see that the MACD is up, this is where we want to sell our call before it goes down, you know, and then hold our puts until further notice. Then it goes down, we sell our puts, and then we're in, we're out, and then the rest of the day can be day trading activity. So usually this would probably would be the best time to sell, and so we're like, let's see, 2, 3, 4, 5. It's really about like 10 minutes, you know, after opening on that chart. Sometimes it's more. It just depends on what the chart does or says. And the 5-minute chart here shows, you know, if we were holding both the calls and the puts, you know, at this point, because of based on the moving averages, you know, then we'd sell our call right here along with the MACD, and so and then you would hold your put. You would have held your puts and continue to held it all the way down until probably right at close. You would sell that put, and then you would rebuy fresh new calls and puts based on wherever the share price is at. Whatever the strike price that's available, it needs to be at or around the share price. So it looks like Apple had fallen to about $138. So that's the calls and puts that need to be purchased. And so for expiration dates, it's always got to be the soonest expiration date. The reason why is because it provides the most volatility. And when it comes to straddling, that's what we want. More volatility, the better. Because we want to, we really do want to we want it the worst case scenario. We can lose 100% on one side, but the gains in our other side are potentially unlimited. And I'll show you, let me find a stock here really quick, and I'll show you what I'm talking about. Because most people don't believe that you can do this. Most people believe that you can only pick one direction. You know, picking both directions, like it sounds conflicting. Why would an investor or trader bet a stock goes up and down at the same time? You know, and they just don't do it, because mentally they feel like it's just, you know, like a conflict of interest, or I mean, just like a, you know, just a conflict in general. And so trying to find something that was pretty volatile last. So I think let's take a look at Boeing really quick here for options here. No, it wasn't volatile enough. I can't really see. Let me see. Carnival Cruise is pretty volatile, but I think they had earnings, so let's see here. Okay, so here's Carnival Cruise. They had they had the earnings last Friday, and so we had talked about it during our last meeting about how volatile that they were going to be, and so they were down 23%. So Carnival Cruise company is basically now at $7. Now, if you would have straddled that, we can see that the calls betting that the stock went up, we would have lost 85% or 84, 81%, 90%, whatever. But if you bet against it, we would have gained 200%, 300%, 500%, 700%. It's unlimited. And so, like I said, you can only lose what you have on one side, but your gains on the other side are potentially unlimited. And so this is where we can swing trade our straddles, and we can day trade at the same time using these indications. And so, but we also want to apply, these rules that we kind of went over, but also another rule is to always follow the money. And so that is to try and trade stocks that have a lot of volume, a lot of open interest, a lot of activity, a lot of news, a lot of hype, a lot of press, whatever, and or upcoming activity based on schedules, calendar schedules. And so but like I said, this is just really important, and it's so easy to configure. And so and I'll show you just how easy that these can be configured. I'll go to our daily chart. This is Amazon, and so this is our moving average indicator. So I use Emma. There's a little gearbox looking icon right here. This is our settings icon. If we click on that, this little indicator settings box appears, and it shows our main charts of how many that there are, and that you can select. And so we have lengths over here, and then we have styles. That way you can pick how many that you want and in what color. It also has an introduction letting you know what exactly this does and means and whatnot. But there are more main or charts and subcategory charts. Now you can only have one main chart out of those, but the subcharts you can have up to 6. And so that way, if you want to try to utilize several at once, you can. However, just know that a regular moving average and your MACD are the two most commonly used indicators with most of the stock market investors and traders. So it only makes sense that you start using them as well. And so this is kind of a gist of moving averages, which we can always get more into later. But let's go more into what's going on this week. Does anybody have any questions before we do that on moving averages? Everything makes sense? You feel free to unmute your mic. You can voice chat or chat in the chat room. Okay, good. Everything looks like it makes sense. That's good. So we'll move on. So I'm going to switch my screens here. Let's go back to... All right. So I've switched my screen, so in case if the participants that are watching have been... if the screen has been reduced, you'll have to go back in and find it and click on it. That way you can see the screen that I'm sharing. Very, very important. That way we can kind of go over what's going on for this week. So, all right. Hopefully you guys are there. And so And again, one of the most important things that we always need to look into a week ahead is the economic reports. And the best place to get the economic reports is on a website and a mobile application called investing.com. When we go to the website, there's a lot of popular areas here. Well, economic calendar is right here, so we'll definitely want to click on that one. When that pops up, there's going to be a lot of gibberish. I mean, it may look like a bunch of gibberish to you at first, but we need to clear everything first. And there's a little filters icon here, or if you're on your mobile application, it'll look like a little funnel. So you want to click on that, and you want to clear everything by clicking the word clear. There's only two things that we need to see, and that we need to put a check mark under the United States, and then under importance, you'll see a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars. Then click apply. The whole page will then refresh, and then we want to click on this week. That way we can see a whole schedule for this week. Now, there's definitely been some things that have been added on here since last week, or even I think yesterday. And so there was definitely nothing scheduled for Monday, and now there is. And so, but it's always good to make sure you're looking at the dates, make sure that we're on the right dates, which we are, making sure we have the 3 stars there, making sure that the United States flag is there. And then it's also very, very important that you are aware of the times. Now, when we're looking at it on the website, it defaults to Eastern time. So depending on where you're at, we just have to do a little bit of math and make sure that you're knowing the times of when these are going to be released, because it's important to know whether it's going to affect pre-market or is it going to affect after the stock market opens. And so as well as what the economic report is, and is it forecast to be bearish or is it forecast to be bullish. And so but you can change the time up here to your time zone, or if you're looking at it on your mobile device, it may automatically adjust the time zone for your time zone. But on the website, it might not really know until you tell it. And so, but knowing this is scheduled to be released in Eastern time 30 minutes after the stock market opens. So again, the first hour and the last hour of the day is the most highly active times of the stock market, because there's a lot of excitement, there's a lot of buying and selling activity as people are adjusting to the market and the news. But it's also important to know what the economic report is, and know how rare it might be, as we do have weekly reports such as the crude oil inventory reports and the initial jobless claims, which is the unemployment report. These do affect the economy, of course, but these are weekly reports, so they are pretty repetitive. So they do have a mild impact on the stock market, but not as much as a monthly report or a quarterly report, as these are more rare and will have a bigger impact on the stock market. And so so going into Monday, tomorrow, October 3rd, we have the ISM manufacturing PMI report for the month of September. So this is a rare report that happens only once a month, and so it will have a pretty a big impact on the stock market. And so the previous report was 52.8, where the forecast is now expected to be lower, which is not it's not good for many, as this appears to be bearish. And so it's anticipated, so the market will react to it even before it's released. They're going to react to it bearish, because this is basically saying that. It's saying to react bearish because we're expecting, and a lot of times it could come back higher than this, or even higher than previous, and it still is acting bearish. Well, because it was planned that way, because of the forecast. So we have to basically do what everybody else is doing, do what all the other millionaire and billionaire investors are doing, and so because they're going to react bearish to this. Now the market could easily open up in the green. I mean, there's going to be so much activity going on that we're just going to get a lot of mixed signals for Monday. It's just not going to really know which direction to go, because there's going to be good news, there's going to be bad news, and so it's going to be a big tug of war for Monday. We're in a new season, we're in a new quarter, and we're in a new month. I mean, it's like a trifecta right there. And so there's a lot of reports that are expected to come out that we'll talk a little bit about here shortly. But if you're not sure what any of these economic reports are, feel free to click on it. Now these are pretty repetitive over time, and eventually you will memorize them. And so, but it's important that you know what these are and how it will have an effect on the stock market. And so these do have a nice paragraph that explains what they are and then how it will affect the stock market on the bottom. And so, like I said, it's just really important that you do kind of look these over, so that way you have a better understanding of them. And so, but there's only so many of them, so after a while you'll just know them by heart. You don't have to click on them. And so, but these are, like I said, all the most really important economic reports that have not only the biggest impact on the stock market, but our economy. And so these make a huge difference. And so going into Tuesday, October 4th, we have the job openings report for the month of August. And so the previous report was at 11.2 million, and now it's expected to be lower than that, 10.6. And so this day they're just going to talk about jobs and how companies are not hiring, or maybe they're downsizing and this and that and stuff. And so this is just going to provide more bearish characteristics for Tuesday. So looking very bearish so far. And then going into Wednesday, October 5th, we have the ADP and non-farm employment change for the month of September. So another rare one. However, the previous report was at 132,000, and it's expected to be a little higher. It's about 205,000. So very interesting there. But and this report is scheduled to be reported about an hour and 15 minutes before the stock market opens. So this one is definitely expected to affect the pre-market that day compared to the previous days where there's nothing really scheduled to have a big impact during the pre-market. And so this is good for volatility, good for those that are looking to straddle. And so very early in the morning there, for massive volatility, versus these ones, you'd have to maybe hold your calls or your puts a little more throughout this time. That way you have a bigger effect on it. And then we have the ISM non-factoring PMI report for the month of September that's scheduled to be released 30 minutes after the stock market. About 30 minutes after the stock market opens on Wednesday, October 5th. The previous report was 56.9 and is expected to be less than that by about 56.0. So very bullish there, bearish, very bearish there. And then the crude oil inventory levels is expected to be released at 10:30, which is 1 hour after the stock market opens. And so there's no forecast yet. However, we will have to come back to this either later on this evening or tomorrow morning during pre-market, because they will put a forecast on here. So we'll have to see what they decide on. But for now, the previous week was pretty down. The last several weeks it was up in the positive, and so which always helps bring the oil costs down and gas prices down. But if this comes down in the negatives, that's just showing people are driving, and that's good. That's bullish for the economy and the stock market. But it also makes it more of a high demand for oil and gas, and causes gas prices to go up. So it's kind of a catch-22 there. But we'll have to see kind of what they say, because we could have a bounce. If this was pretty low, so we could see a bounce up, which could be bearish. And so, especially with the gas prices jumping up, like 60, 70, 80 cents nationwide in the last week or two, there's going to be less people that are going to be driving as much. And so we could easily see, unless they manipulate it, they could easily manipulate these numbers by not buying as much oil from Canada or pumping as much oil. So it can naturally look like that there's a huge demand for it, even though they're cutting off the supply, making it look like there's a high demand and a short supply, and forcing the values to go up. So very, very manipulated. And so it's nice, because when you know more about how this stuff works, it's like they can't bullshit a bullshitter. And so we can see right through their games and their lies and stuff. But the more that we know, the more that we can react to it properly and effectively. And so it just really helps. And that's why the more we learn, the more that we'll earn. And that's why we always have these meetings, that way we can kind of go over things and synchronize information and stuff. Thursday, October 6th, it has the unemployment report. Now, this report is scheduled to be released 1 hour before the stock market opens. So this is scheduled to provide us some pretty good volatility for Thursday morning. And this report, the previous report, was down pretty low, very, very surprising, 193,000, and however is expected to have a little bounce upwards, which is bearish. And so they may talk more, the news may talk, or probably glorify it a little more regarding about how companies are downsizing or not hiring, and how this could easily go up. So sometimes, these news companies, media companies, will make a bearish day more bearish, or a bullish day more bullish. And that's why we can kind of see some pretty massive volatility lately. And so Friday, we have October 7th, we have two economic reports that are scheduled to be released 1 hour before the stock market opens. So we got some extra volatility going into Friday morning. And but however, the non-payroll, the non-farm payrolls for the month of September, which the previous report for the month of August was 315,000, but now it's expected to be less than that at 250,000. So definitely bearish there. Or the unemployment rate for the month of September is expected to be the same thing, 3.7%. However, most investors are going to keep a close watch on that. They're probably more likely going to assume it's going to be less than that. So definitely expecting lots of more bearish characteristics this week. But however, we are in a new season, we're in a new quarter, we're in a new month. So there are some positive sides to this month. And usually when you look back in history, September is always a rough month anyways. And that's normal, because it's the last month of the quarter. And we also have a lot of other bearish events that take place, and so that characteristic is normal throughout this cycle. And so when you look at if you look at in October, October is usually kind of the month where things kind of gap up halfway, and so it's kind of a month where things kind of start to recover, and then November things start to kind of teeter-totter again, and then December is like another September, where things are really going to start to fall even more. And so, but the stock market has to come up before it can keep coming down. And so, but again, so this is what the majority of the volatility is going to come from. So it's only. Like I said, it's extremely important that you get this down. And however, there are other things that are going to have an effect on our stock market this week. And so let's pull this up here. So instantly, And I mean, really soon, either tonight or during pre-market, we're going to have, look at down here on the bottom left, we have the third quarter auto sales and delivery reports will pour in during the first few days of the month. Watch for volatility, especially from Tesla or Li Auto, NIO, Xpeng, Rivian, Ford Motor Company, General Motors are going to be the primary ones. And so NIO is going to be huge. Now China has been manipulating their economy by shutting down due to COVID or whatever, and so they've limited company productions. I think earlier in the year. And I think like during the second quarter, reopening up on the third quarter, going back into full production, we should see where they'll say, oh, we had great, deliveries and sales and blah, 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 compared to their previous quarter. And so, as well as Tesla, who has been opening, bigger factories and stuff, and building and continuing to add to them, increasing their production. We could see some pretty gnarly reports. So these reports could be out like within hours or days. So we got to stay all over the auto sales and delivery reports. And there's going to be some other ones for Monday as well. With this one here, this ticker on the top left, the ILMN, options volume or options trading volume is elevated due to the company's hosting its Investors Day. So Investors Day for this stock is going to be on Monday. And then the Rocket Company has a under 30 summit. So there's going to be a lot of investors watching real estate mortgage companies basically for Monday. And then we have the blue Apron. Option trading volume is also elevated due to a company announcing plans to cover its debts, and some analysts are praising its turnaround plans. So there's going to be a lot of volatility. A lot of option traders are expecting around a 20% price movement in either direction. So where the Rocket Company, they're expecting around a 9% price movement in either direction. Now, American Tower, or AMT, which is due to the company presenting at the Citi Global Digital Infrastructure Seminar, and so their option traders are pricing in around a 7 to an 8% price movement. And so these stocks, like I said, they're definitely going to be on our watch list. So only good to to keep an eye on. And so Tuesday we have some more activity here with these stocks, such as the Liberty Global. Option trading volume is also going to be elevated due to the company presenting at the Morgan Stanley Telecoms, or the CTO. And so a lot of option traders are pricing in around a 10% price movement in either direction. Hasbro, or option trading volume is going to be elevated due to the company hosting its 2022 Investors Day. Option traders are pricing in around a 10% price movement in either direction. The trade desk is expected to be elevated due to the company hosting its 2022 Investors Day, where it's also expected to have a price movement around a 9% movement in either direction. American Electric Power is also expected to be elevated due to the company hosting its Analyst Day event, and is expected to have a price movement around 6 to 7% in either direction. Duke Energy is also expected to be elevated due to the company's hosting its virtual presentation due to providing an update on their clean energy transition and other business initiatives. So option traders are pricing in around about a 5 to 6% price movement in either direction. Now on Wednesday we have the OPEC and the non-OPEC meeting, and so this wasn't on our on the big impact, but it's definitely going to be. I mean, it wasn't scheduled on the major economic reports, but it is definitely something that is happening with some other companies and stuff. Maybe not so much the government, but it's definitely something that's going to have a big impact on the energy segment. And so where crude oil has been seeing some strength over the last 2 sessions, bouncing off an 8-month low as a arrival of Hurricane Ian in the Gulf of Mexico caused disruptions in the United States crude oil supply. The crude market is still set for its first quarterly loss in more than 2 years as central banks across the globe, and Federal Reserve in particular, hike interest rates to combat soaring inflation at the likely expense of the future growth. And so we're going to see a lot of volatility in the oil segment. The next one down below is the Lamp Weston, or LW is the ticker. Looks like earnings before market, and so looks like there's expected to be some price movement on this one. Option traders are usually pricing in around a 9% price movement on that one. Next one is the HCP, or Hashi Corporation. Option traders are trading volume is also expected to be elevated due to the company's holding a financial analysis day event. Option traders are pricing in around a 21% price movement in either direction. So very, very volatile that one is expected to be. Costco is right here. Costco is also expected to be elevated its volume due to the company's reporting sales for the month of September. This report will be closely watched throughout the retail sector for any warning signs of consumer spending. Option traders are expecting a price movement anywhere around 3 to 4%. Going into Thursday, we have this stock right here, ALNY. Option trading volume is expected to be elevated due to the company's announcing a FDA acceptance for a supplemental new drug application for whatever this is, for the treatment of advanced primary hyper whatever. I have no idea what that is, but this is normally we don't see pharmaceutical drugs on here, and so if it is, that's huge, and so we'll have to do a little bit more research on what this is and how it can help, and there's another website we can look at too that can provide more information on this stuff, so we'll have to kind of take a look at that later. Next one here is Veru, and VERU. Option trading volume is expected to be elevated due to the FDA advisory committee meeting to review emergency use of authorizing for this, whatever that is, for hospitalized COVID-19 patients at high risk for acute respiratory distress. And so option traders are expecting around 11% price movement in either direction. So there's another one that we got to do a little bit more research on this week. So next one is the Norwegian Cruise Line. Option trading volume is also expected elevated due to the company hosting an investor event. So this is very interesting, as a lot of the cruise lines have been beat up a lot lately. This could help bring it up potentially, but however, investors are expecting a price movement around 12% in either direction. The next one is Google. Very, very important. Now, last couple weeks, there's been a lot of unusual buying activity on Google, and so Google option trading volume is expected to be elevated on Thursday due to the company's Made by Google event. That's huge, and so announcements are expected to include updates on the new Pixel 7, Pixel 7 Pro, the Pixel Watch, and other hardware preview possibilities include teasers on a Nest product or Pixel tablet. So investors are expecting around a 4 to maybe even a 5% price movement in either direction. Now, Levi's is also expected to have earnings on Thursday. With this, according to this chart, a trader or investors are expecting around 11% price movement in either direction, but I have another report that we'll look at here shortly. there's another one here for, okay, so going into Friday, we have a huge, as we were talking about the economic reports, out of this chart here, it's saying Friday, out of probably all of the economic reports, this one may have the biggest impact out of all of them. So this says high impact news event, and so holding positions and or openings in any new positions during this time may be risky, and that's why we want to straddle. Bring it on. We're all in. And there's a saying, buy the fear, sell the greed. When we see that fear, it's like, oh, that means volatility. We want it, so we straddle it, and we're going to profit from it every single time. And so it's saying that at 8:30, so again 1 hour before the stock market opens, we have the non-farm payrolls, and the unemployment rate for the month of September will be released. Economists are forecasting around 250,000 job additions, while the unemployment rate holds steady at a 3.7%. Now, we talked about all that, remember? So the Bank of America's economic team notes that the momentum in the labor market is proving to be difficult to slow down, forecasting average hourly earnings to rise by 0.3% month over month, or 5% year over year, to leave wage inflation far too high for the Fed's comfort level. So Friday, just let's bring it on. Tilray also is going to have their earnings, and I have another report that we can kind of go over, but investors are expecting this one to be very, very volatile. Normally, it usually goes down, unfortunately. We're just waiting for the right time for the cannabis, because the recreational cannabis will be legalized nationwide. It's going to happen. It's inevitable. It's just it's not a matter of if, but when it's going to happen. It's going to happen in two ways, and I've repeated this before. It's either going to happen automatically due to the fact that there's a certain amount of states that legalize it recreational. I think it's like 20 or 22 or something like that. But once that happens, the rest of the United States, it just automatically happens. And so, or another way is that they can vote it. So, which they've been trying, and it just keeps getting kiboshed. It passes in one phase, but then it doesn't in the other phase. And so, but eventually that could change, just like it did with Canada. But it is not going to be a long-term thing. It's going to be a temporary wave that we want to ride. But when it happens, we want to get in and we want to get out as soon as it becomes legalized. Because what happens is that they're going to pump everything up, and then once it gets legalized, the market will flood itself, and then these farmers and the stores and stuff, they're not able to become profitable as much. We're going to have other massive corporations that are going to get more involved. They'll be buying a lot of these smaller companies out, and a lot of these cannabis stocks, they're just going to plunge. They're going to plunge right back into penny stocks. But in the meantime, they have the potential to gain thousands of percents in a very short period of time. So we just got to stay all over it. If you're buying on the lowest possible dips. But Tilray is usually one of the number one. Tilray used to be $150. Now it's under $3. And so it could easily get back to that $50, $100, $150 once we start, hyping it up. And so, but for now, they're beating it up, trying to get it down as low as possible. But eventually, things are gonna turn. So it's a great one to always keep on your watch list. Apollo, or APO, is also expected to have elevated volume due to the company's hosting its 2022 annual meeting of stockholders. So investors are pricing in around a 5% price movement in either direction. Then we have Unity, or the stock sticker symbol is U, is also expected to have a volume elevated due to the special meeting of stockholders. Last but not least is the Taiwan Semiconductor Company, or TSM. Very, very important, because the Taiwan Semiconductor Company is it mass produces microchips. They're very needed. They're a hot commodity. We just can't get enough of them, and so. But these semiconductor companies are always at the mercy of rare earth materials. If they can't get enough rare earth materials, they can't manufacture enough microchips, and so they're not profitable. And so it's just really important that we kind of follow these, because if one semiconductor company has bad news, it typically can affect the rest of them. Or if one has good news, it can affect the rest of them. And so they kind of that one works that way. And so the most popular semiconductor companies is pretty much your AMD and Nvidia. And so just be prepared that there's a lot of volatility that's expected to happen with the semiconductors on Friday. And so that is that, and we usually typically put these here under our featured areas every week. So there's a lot of great information that you can find right here. And so an earnings report is also another really important one to kind of look over. And so we were talking about Tilray. Tilray is probably going to be the number one most anticipated stock option. I mean, not stock option, but stock for this week for earnings. And so, and if you're not sure what the company is based on the name, a picture can say 1,000 words. Look at it; it's a cannabis company, and so they're expected to release their earnings report on Friday morning before the stock market opens. And so the company earnings release has a 54% expecting an earnings beat. So that is, that's almost 50-50. They're just not sure. It could go either way, but it's going to be volatile either way. Option traders are pricing in around a 16% price movement in either direction, where in the past it's moved around 10%. So there could be some extra volatility with this one, especially with all the other activity that's been going on Friday. Then we have the Matrix service right here. You can see they're part of the energy segment. So the Matrix company or service company is expected to release their earnings report on Friday after the Friday after the stock market closes, which is kind of weird. Normally everything's early in the morning, but we'll have to double check on that. But the company's earning release has a 45% expecting an earnings beat. So that's almost a 50-50. It could either go it could go either way. So the company's stock averaged in the past around 8%, because energy is a big deal right now, and so expect a massive volatility on this one as well on Friday. Then we have Crudi Brands, and Crudi Brands is confirmed to release their earnings report on Tuesday morning before the stock market opens. However, this company's earnings release has a 34% expecting an earnings beat, which is not good for them, but it's very bearish. However, option traders are pricing in around a 6% price movement, which is what it's done in the past. Levi's, which there could be a lot of issues with that. Retail sales could be down. They could be struggling coming up with materials. There could be all kinds of issues that Levi may be facing. However, Levi is expected to release their earnings report on Thursday after the stock market after it closes. However, the company's earnings release has a 53% expecting an earnings beat, which is again another 50%. We just don't know. However, option traders are pricing in around a 10 to almost 11% price movement in either direction, but normally it moves around 3, maybe 4% at most. And so, but like I said, option traders are pricing in a much more volatility than ever before with Levi's. And so, and then we have the Constellation Brands. Again, not knowing exactly, if you're new and not sure what the company is. Again, the picture says 1,000 words. They rely on, or they process a lot of these alcoholic drinks and stuff. And so And so they're scheduled to release their earnings report on Thursday morning before the stock market opens. The company's earning release has a 21% expecting an earnings beat. That is absolutely terrible for this company. Obviously, they're struggling with sales. And think about it, with the way the inflation is. I mean, when we go to the grocery store, our groceries are up like 50%. People are having to be more selective on buying things that they need, not want. And so this is where we can see that the Constellation Brands are probably struggling for the third quarter. And so option traders are pricing in around a 7% price movement with this brand, where normally it moves around 3%. So we're definitely expecting twice the amount of volatility than ever before. Mccormick's, same thing, where they do a lot of seasoning and stuff, so there could be a little bit of a slowdown with that, as a lot of people are probably becoming a little more frugal about their seasonings and stuff, probably getting more things that are more of a generic brand, especially the Walmart brands. A lot of the stuff that you can get for like $1 or so, using the Walmart brands and stuff. So rather than spending $3, $4, $5 on something like this. So, but they are expected to release their earnings report Thursday morning before the stock market opens. The company's earnings release has a 44% expecting an earnings beat. So it's very, very close to 50-50 there. However, option traders are pricing in some massive volatility with this one, anywhere between 8 to 9%, which is a lot. Normally it only moves a little bit, 2%. So there could be, like I said, some really massive issues going on with this company that could jeopardize their growth. And so RPM, is pretty big. They have a huge industrial segment with a small consumer segment of a lot of different brands and things. So and they're all pretty much listed here. So again, huge company. RPM International is confirmed to release their earnings report on Wednesday morning before the stock market opens. Company's earnings release has a 29% expecting an earnings beat. When you got a lot of these brands and stuff, you got to stay really productive and profitable and stuff. Otherwise, there's going to be some brands that are going to do very well and other brands that are not. And then so the other ones are trying to carry each other, and then until you're not profitable anymore, and then you're then you got to really downsize and do other things that you wouldn't want to normally do. So the company's earnings release has a 29% expecting an earnings beat. Option traders are pricing in around an 8% price movement in either direction. So also expected to be very, very volatile, as we've seen in the past. That it usually moves around 2%. Not usually a big mover, but it's expected to now. And here's another one right here with Byrna technology, something like that. But so this is basically a non-lethal weapons, and so great for whatever target practicing stuff or whatever, or riding, anti-riding gear and stuff. And so, but we haven't really seen a whole lot of that lately. But we will soon, as the big red wave, starts to happen here in November and stuff. So we're seeing a lot more extremists when it comes to certain people that are Republican or Democrats, and so there's a good chance that the government officials know, and they could have bought a lot of this stuff throughout the recent quarters. And so as they anticipate that there could be a lot of rioting or protesting and stuff. And so, but they're expected to release their earnings on Wednesday morning before the stock market opens. The company company's earnings release has a 39% expecting an earnings beat, which is definitely bearish. It's not good. Maybe they're just slowing down with their and they're fairly new to the stock market. They haven't been listed on there very long. Where normally they've moved around 7% in recent quarters. And so, but we do anticipate this to be a pretty volatile one. Now, the Helen of Troy is right here. The Helen of Troy is expected to release their earnings report on Wednesday morning before the stock market opens. The company's earnings release has a 27% expecting their earnings beat. 27%, that's terrible. Now, the opposite of that's 73% expecting an earnings miss. Now, if you're an option trader, earnings is got to be considered as a lottery play, and the reason why it's got to be a lottery play is just like if you were to buy a lottery ticket. Most likely you're not going to win that lottery ticket. It's money that you put towards that lottery ticket in case if you were going to win. It would have been a plus. That would have been great, but it's money that you're not going to miss. And so the same thing with in options using earnings play is that in case if things don't work out and it ends up flat because it's manipulated or whatever, if it ends up flat or just not becoming that volatile, there's a good chance that both the calls and the puts are going to get crushed due to something that's called IV crush, or it's also known as implied volatility crush. And it's something where something like this can drastically devalue both sides instantly. And so that's why when it comes to options on a earnings release, is that we always want to go light. The heavy stuff is always on the majority. Apple, Amazon, Tesla, or even the semiconductors like Nvidia or AMD. Which we'll look into that here in just a few minutes. But these are just lottery plays where we go lightly. If things work out, we could potentially gain like 4,000%. But if it doesn't work out, it can be a huge loss. And so that's why we always want to go light. And so the next one is the Smart Global Holdings. And so they're expected to release their earnings report on Tuesday after the stock market closes. The company's earnings release has a 35% expected earnings beat, another low one. Now, it wasn't that long ago where the average percentage is around 65%. So we're seeing a lot of these are way below average due to the fact of what position we are within our 10-year cycle, with our economic cycle. Which, if you didn't know, that the stock market has a couple cycles. We have our yearly cycle, where normally the first or we have 6 months where things go down, then the next 6 months things go up. Well, there's also a 10-year cycle where we have this kind of like the reset button, or we're kind of what we're going through right now, where things are drastically down, and we go through this interest rate tightening and everything, and then things start to go the opposite direction. So it's the same thing every 10 years. So we're just kind of right at this point right now. So the option traders are pricing in around a 19.5% price movement on this. Now, out of all of them, this is anticipated to be the biggest mover out of all of them. And most likely could be down more like the downwards direction. So as a straddler, we could maybe instead of just going 50-50 on our calls and puts, we can go maybe more 60% puts and 40% calls, because the puts on something like this is telling us the puts are more likely in our favor. And so after looking at all this stuff, then we want to refer back to the investing.com. Every Sunday morning they post the top 5 things to watch ahead for this week. And so it's always important to make sure that we didn't miss anything. So it'll say like investors will be looking closely at Friday's United States jobs report to access how much impact the Federal Reserve's rate hikes are having on the economy. Several Fed officials are also due to speak during the week, as markets try to gauge their appetite for another 75% basis point rate hike at the bank's November meeting. That is very, very bearish, you guys. Very, very bearish. No, geez, this is nuts. United States equity markets look set to remain volatile after closing the books on their third straight quarterly decline on Friday. In the United Kingdom's investors will be looking at the Conversations Party annual conference for any indications of a U-turn on the government's tax-cutting budget, which has sent sterling plummeting and government borrowing costs soaring. Meanwhile, the OPEC is reported to be considering a major production cut at its upcoming meeting on Wednesday. Here's what we need to know. A lot of this we've already talked about, but that 75 base, I mean, just another appetite for a huge interest rate hike. My goodness. Number one, really important, according to investing.com, is the Friday's jobs report for September will show whether the Fed's aggressive series of rate hikes is having an impact on the labor market. And so, again, this is just huge, but and feel free to read it more, but we'll skip it because we've talked about it enough. Number two, the Feds speak, and so the federal or several Fed policymakers are due to make appearances during this week, and we'll be able to kind of monitor some of this stuff. Some of these aren't going to have that big of an impact, but we'll be able to kind of monitor the ones that will. And so the next one is the stock market volatility, which is a lot of stuff that we've talked about. The markets are entering the final leg of the 2022 after closing out a tremendous third quarter on Friday, rolled by stubbornly high inflation, rising interest rates, and recession fears. And so the Wall Street has posted a third quarterly decline in a row, the longest losing streak for the S&P 500, Nasdaq since the 2008, and Dow's longest quarterly slump in 7 years. The fourth one is the United Kingdom market turmoil, and then the fifth one is the OPEC meeting that is on Wednesday. The Organization of the Petroleum Exporting Countries and Allies, including Russia, are to meet on Wednesday at the OPEC's headquarters to finalize the output quotas for November. So this is going to be a mess. And so, like I said, it's most likely it's going to keep causing the oil and energy values to rise. And so, that's so one of the other things to really look at when it comes to looking ahead is especially when it comes to things that will create a massive amount of volatility is Joe Biden and the White House. And so there's a website right here, and you can just Google Joe Biden's schedule, and it'll take you right here to this this calendar. Now this will update every midnight at Eastern time or at 9 p.m. Pacific time, kind of giving people on the West Coast an advantage. That way they can kind of see what's scheduled to happen. Unfortunately, we can't look throughout the week because the president's schedule is basically scheduled day by day, and so it's always good to know what's going to happen, and a lot of times this stuff is live, and then we can pull it up on YouTube. You just type in Joe Biden live or the White House live, and then that way we can look at press conferences. And but like I said, this is extremely important. Every morning or every night you go to this website and you see what's scheduled to happen before it happens, just like what we've been doing. So it's extremely important that we plan our trades so we can trade our plan. Benjamin Franklin said, if you fail to plan, you're planning to fail. And that's not us, you guys. That is definitely not us. And so we're the real deal. And so this is what we do. We do our due diligence. We plan ahead. We know what's going to happen before it happens. That way we know what to expect. And so, but this is, like I said, all really important stuff. And then we can go into some options activity. Let me see what I have here. Okay. So let's talk about the quantitative tightening really quick. Quantitative tightening is where the government is selling stocks that they bought during quantitative easing. And so what this all means, because this is a bunch of gibberish to a lot of you, I'm sure. So in 2020, the government shut the economy down during the second quarter. They said go home, except unless you're essential, if you work at the grocery store or the hospital or whatever, first responders, you guys got to still work. But shutting everything down, shutting the factories and everything down, it created this. That's what kind of started the short supply, high demand thing, but also. It created a decline in growth and profit for companies in the stock market. So they all plunged. Nobody was driving, and so they were still pumping oil, and so the oil inventory levels went beyond full. And so when they're full, they depreciate in value. Oil went under $1. Under $1. And the government started to buy stocks they call quantitative easing, billions and billions and billions of dollars worth of stocks every so often. And they called, and their excuse was, oh, we're trying to keep the economy afloat while everything is down, while everyone's in quarantine and everything. And so as they're buying billions of dollars of stocks, again, they're buying oil, dirt cheap, as well as other, Apple and Tesla and all kinds of stuff, dirt cheap, trying to keep it afloat. Well, they intentionally, created this huge dip, and now they're trying to keep things, elevated, and so now they're what's called quantitative tightening. They're selling the stocks that they were buying. Now, at the time it was scheduled, we knew what days that they were going to buy stocks, because when they bought billions of dollars worth of stocks, the stock market surged straight up. It could be 2, 3, 4, 5% at a time. It was huge and it was glorious. But now it's the opposite. Quantitative tightening is where they're selling. Now we're seeing the stock market drop 2, 3, 4, 5% at a time. Almost where it's barely triggering a circuit breaker. Now, again, these are scheduled to happen. This is the schedule right here, right at your fingertips, and it's using it's hosted on the Federal Reserve Bank of New York, because it's what the government likes to use. That's their bank account. That's the bank that they like to use, and so and bam, there it is, available to the public. And we see what days that they are going to happen, and how many billions of dollars that it's going to be. So this Tuesday, or on the 4th, is scheduled they're scheduled to sell about $5.9 billion worth of stocks. So $5.9 billion, they're going to trim that off right off the stock market. And then the next one, I think this is probably the largest one that we've seen so far. So Thursday the 6th, they're going to trim off $19.5 billion right off the stock market. That's huge. And so, but what we have noticed since they started this several weeks ago is that, because we're trying to identify when they're executing these orders. Are they doing it all at once? Are they doing it gradually? Are they doing it during pre-market? Are they doing it during the market hours? Are they doing it after market? Now, the first few weeks, they were kind of doing it during pre-market and during the market hours. And then after it seems like after the government has kind of seen how we're catching on, then they started to trick us by doing it during after hours. Now, if they do it during after hours on these dates, that means it's not going to affect that date, but the next date. So if this order gets executed on, let's say, after hours on these dates, that means it's going to affect the next date. So that means October 5th is when it's going to be affected, or October 7th, which would be on a Friday. Would be greatly affected. and they may do that intentionally. And so we just have to really, know, there's a massive drop. That's how we know, has this been executed. Now, we have also learned when this gets executed during after hours, it's not that volatile, unless it's a big dollar amount like this. But if it's a smaller dollar amount like this and they execute it during after hours on going into the next day, investors have had some time to kind of cool down and maybe buy stocks and to kind of keep things elevated. And things are going to be down somewhat, but maybe not as much. But something like this, I mean, that's huge. So we just have to know these things. Know when it's going to happen and the reaction of how it's going to react to it. And so that way we can take advantage of the situation. This is great, like I said, for straddling, in case if you're not sure what to do, if you're new. Straddling can be very simple if you follow some of the basic rules that we just kind of went over. And but this is the thing that was nice about the quantitative easing is not only was it scheduled to happen, but there was a lot more money poured into the stock market, and it had a pretty massive effect that we were all able to benefit from it tremendously. But it only lasted for like a month and a half or so, or a couple months. It wasn't that long compared to the quantitative tightening. It is scheduled to happen all the way to next September. However, it is still very limited. If you're not taking advantage of this situation, you need to take advantage of it now, because this is almost a once in a lifetime for every 10-year cycle. So the next time this is going to happen is almost in another 10 years. It could be 7 years, 8 years, 9, 10, 11, 12, but around 10 years. And so, you don't want to wait that long again. If you already missed the quantitative easing, do not miss this event. I mean, this is hugely in our favor. And so, and when we're looking at this calendar, we can see that it's been going on about twice per week, but eventually it's going to slow down to about once per week. So let's go down the list here. Let's see if we can find where it kind of begins. Instead of every 2 weeks, it's going to turn into once a week, and that looks like it may be in December. So going into December here, we have now it turns into one day a week. And then after a while, then it'll turn into 1 day every 2 weeks. Looks like probably next probably first quarter, second quarter, and then it turns into once a month up until September. But knowing this is when the investors will begin to see the light at the end of the tunnel. At around this time, not only has the quantitative tightening minimized to the point where it is now ended, but now the government is going to not increase interest rates as high anymore. We'll be looking forward to going into 2024, because now they're going to start doing interest rate easing. Interest rates will start to reverse. They're going to start getting lower, and plus there'll be elections and all that stuff, and that may also help, because the investors will see that the next leader will most likely do a better job with the economy, and so that will provide a lot of anticipation and causes the market to go up as well. And so, but like I said, it's just really, really important that we always kind of go over this stuff because it's just always good to know what's going to happen before it happens. And there's a thing that I always post to you guys every once in a while. It's a forecast. It's a forecast of our. I'm trying to find it here on my phone here, so that way I can upload it. But yeah, it's a forecast of the Nasdaq going into 2024. Let me see here. So Nasdaq forecast month by month. Now this forecast was brought to us by one of you guys, and which has been awesome. And it was you guys got it from a website or an organization called Long Forecast. And so how we read this is we basically, the total of the percentage down or up is basically kind of based on July 2022. So for August, it was anticipated that August would be down about 3.5% compared to whatever Nasdaq was for July. And then September down even more, and it was even more than forecast. But look at October. October now says negative 2.5. So this means October is expected to have a recovery, probably about half of whatever we lost during September. And so, but then going back into November and December, we're expected to continue our decline. So just know, and even historically, October is always, you know, a recovery month. It's a new season. It's a new month. It's a new what was the other thing? Yeah, new earnings season, new quarter, yeah, new month. And so you know, and the other thing is there's no interest rate hike scheduled to happen this month, but there is for November and December. So that with that aggressive, that 0.75, that 0.75% rate hike, that's just too much. You know, less is more, and so they're intentionally trying to do this. And so, but again, we need to know what's going to happen before it happens. So November, December, back down, and then January, bam, that's when it's really going to really hit pretty hard. January, February, a little bit of a recovery there, and then March back down, April down even more, and then May, you know, with the more of the quantitative tightening and stuff, and more interest rate hikes. I mean, it's just going to be nuts. And so, and then June, you know, just still bouncing around, you know, down 20% compared to what it was, you know, in July 2022. And then, however, I believe that because going into the third quarter, that is the most bullish season of the year. And so that is where I believe, you know, investors will begin to kind of see the light at the end of the tunnel, and we'll start to see the market starting to come up. So basically we have 9 more months of a bearish downtrend before we'll see a very good, strong, bullish season towards the end of next year. So, but we do see it kind of reacting late on this chart, where we see August is down that 18%, but after August, like September, it starts to recover. Now it's down only, you know, 15%. October is down only 14%. November is down only 10%, then 11%. Then going into 2024, that's when really things start accelerating in the upwards direction. Now it's only down 8%, 9%, 7%, down 4%, and now May of 2024, everything has fully recovered from where it was in July of 2024. I mean, it's taken almost 2 years to recover. I mean, my goodness. And now June, we're up 5%. We've made it through all this stuff. We're now the government's lowering interest rates. They're no longer selling stocks. You know, now investors are buying stocks. Let's get back to business and everything, and go back to normal. You know, and now hopefully we got a president that has its head on its shoulders and is ready to rock and roll. So this is going to happen, you guys. It may not happen exactly like this, but it's going to be very, very close. And so it's a good guideline because it's just one of those little pieces of the puzzle that just makes sense along with everything else. And so it's you know, it's not going to happen to the T, but it's going to be very, very close to the point where we could use it as a guideline. And so so let's look into some options, you guys. This is going to be Friday's most active stock options. Now, Tesla, Apple dominated this list. Someone's sharing something here. I don't know what's going on here. So, I don't know. Someone's sharing a video experimenting. So, sorry about that. Sharif, you have a question? I think your hand is up. Everything makes sense. Anybody have any questions about any of this stuff before we get into options? Now, my screen was minimized due to the video interruption, but I do have my screen back on there in case if it was interrupted on your end. Be sure to click back in there. That way you can see the option screens. But yeah, if you have any questions regarding the economic reports or any of this stuff, don't hesitate to let me know. But so most active options Friday right at close was Tesla, and so normally it's Apple, but Tesla, we have the artificial intelligence event, which is very very interesting. So it's a good topic that we need to talk about next. I don't know if some of you guys watched it, but it was definitely a very long 3-hour event. But the majority of the important stuff is pretty much in the beginning, maybe the first 10, 15, 30 minutes or so. But we weren't sure what to expect, and so there were some disappointing things, but there were some other things that could provide some bullish characteristics. And so let's definitely talk about both. And so the design of the robots were completely different from the concept, and so that was kind of interesting. They're a little bigger, bulkier, and whatnot. And so, but it's a prototype. There's still going to be work to be made and whatnot. They had 2 different models that were displayed. Their older one that they've been working on, and then their newer one that they're working on now. Kind of looks like a RoboCop, but they did mention that they do plan on mass producing this robot. They want to build millions of them. So these are robots that are going to be able to help you doing your normal house chores, or maybe even gardening, as well as doing things for companies or manufacturers and stuff. Unfortunately, it's something that could easily replace jobs and stuff, that we've seen in movies and have had issues in the past 100 years ago, people in factories being replaced by machines. So it's going to be very, very interesting. Now, price-wise, he did mention that this is going to cost less than a car. But my question is, what kind of car? Like a gas car or a Tesla Model 3 car? In that case, it could be less than $20,000, or it could be less than $40,000 or even $45,000. Who knows? But the interesting thing, though, is they do intend to make millions of them. And as an investor, what do we think of that? Ching! We're thinking of money, dollar signs, revenue, profit. And so that's bullish there. The bearish part, though, is that they mentioned that they're still probably a couple years away. And so we were hoping that they were a little more ahead with their progress, and that maybe they could start taking reservations and start delivering them in 2 years. But it sounds like that that they could be 2 years away from taking reservations and then having them delivered 2 years after that. So we could be 4 years away until they're actually delivered to consumers. So that's kind of the bearish thing there. So, but we do see out of this amount of volume, we do see almost a 50-50 call and put ratio. But not only that, but going into Monday, we have that third quarter auto sales and delivery report. So that alone is going to provide a massive amount of more volatility for Tesla. So we're getting kind of a double whammy of volatility with Tesla, and that is why it has 2.8 million in options volume, almost twice as much as the Apple volume at 1.8 million, and with a little less calls on this one, where it's more majority of puts. But again, always follow the money, and this is a great guide for your straddling questions. What should I straddle? Tesla, Apple, Amazon. The top three. What percentage ratio should I straddle? 50-50, unless maybe it was 60-40. Maybe there's something going on. The investors know something. They know something's going on, and it's going to be more in their favor if they buy more calls. You'll see 60% calls and 40% puts, or vice versa. Maybe 60% puts and 40% calls. Use this as your ratio guide, and use this as what stock options should I straddle. Now, we can also look at this regularly on a daily basis, and we'll see things that are normally on here, like these guys, or the semiconductors like AMD and NVIDIA. But every once in a while, when we look at this regularly, we'll see something on here that's not normally on here. Like Carnival Cruise, which is not normally on here, but they've been affected by their earnings release. However, people are still straddling them, going into the next trading day. And then again, we have our semiconductors, which is usually very volatile. Then Facebook or Meta. NVIDIA, which is normally on the list, but they're normally on the bottom of the list. So there's some kind of activity going on with them, but there's a lot of straddling activity, 50-50. Now Alibaba is right here, and they were up about 1%, or about up to $80 on Friday. But look at this, we have a 70% put ratio of the 30% calls. So the majority of them are betting against Alibaba going into the weekend and trading, resuming trading on Monday. And so then we have Nike, which was also affected by its earnings report. Nike down quite a bit. I figure if Nike's down, Levi's is going to be down too, and so it's just going to be more of an opportunity for us, especially when it comes to straddling. And so then we got Microsoft and a few others. And then look at this one though. The PBR was showing a lot of unusual activity last Friday. They're a Brazil energy company, and they're right around $12. They're not much, but we have a massive amount of calls activity. And this stock is never on this list, and now all of a sudden it is, with 337,000 in options volume. Again, volume is the current day's buying and selling activity. And so it's just important that we know that, and that way we can try to figure out, is it mostly buying activity or is it mostly selling activity? So we'll look more into that here in just a bit. But just know that out of this volume activity, 87% is calls activity, while 12.7% is puts activity. So it's always good to kind of look to see for unusual activity, or maybe stock options that's flying under the radar. And even if you're not into stock options, we can still utilize this information for shares. That way you can figure out what shares to buy. Because again, we're following the money. We're not, rather than listening to analysts and listening to their words of what they think or feel. This shows us where the money's going, where they're putting their wallet at. What's in your wallet? This is it. You're seeing that. And so we can click on options volume leaders by clicking on the options menu. Options volume leaders will show us the most active individual calls and puts. But when we're looking at it on a Friday, Saturday, or Monday, or whenever, we may see some that's expired. So DTE is the number of days until that particular individual call or put has expired. So going into the next trading day, it's invalid. So it'll disappear. So we want to ignore any of these that are expired and focus on the next one that is current. So PBR going into this week is the most active individual call and put out of all of them. And so this is a $14 call when it's currently at $12.34. So, and this expiration date is for this Friday, October 7th. And with two strike prices, one at $13 and one at $14. And look at this. So this is how we can determine, is it mostly buying activity or mostly selling activity, or maybe a blend? So with these two calls, they were just right around 1,000 in open interest. And if you're new to options, open interest is the total number of open contracts that have been traded but not yet liquidated via offsetting trades, meaning that this was previously purchased but not yet sold. So this means that, let's say we have about 1,300 people that have bought it prior from Friday that are holding. They haven't sold yet. Now all of a sudden, Friday, we get 93,000 new volume. This is showing pure buying activity. Because if we were worried if this was selling activity, then the open interest would have been the same. It would have been 95,000, and then all of a sudden the open interest is 93. That could have been all these people that were holding could have been sold it. This is telling us that like 99% of people absolutely are betting that this is going to go up. So if you're not into stock options, and let's say you buy this at $12 and it does get to $14 as a share within 1 week, you just gained, like over 10%, and like or 15% or whatever, and so, or 13%, 12.5%, whatever, and so and that's just from holding shares, and there's other opportunities that we can find in here, but this is a great way how to do that. And so, but this is telling us, but in a short period of time, especially if these investors are right, with this amount of buying that they probably are, in the options world, you could gain 30%, 40%, 50%. I mean, the gains are so much more volatile in the options world compared to just regular shares. So the next one is right here. We have an Apple put, which Apple right now is $138.20. We have a $140 put strike price, which means this is already in the money. This one expires in October 7th on Friday, with the open interest of only 11,000, and then we have 71,000 in the options volume. And so that's a lot of buying activity going into holding it throughout the weekend, going into Monday. So it just seems like that. We'll see here. So the next one is FCX. I'm not sure what FCX is. Freeport McMoran. Not sure what that is, but it's on the list. It's never on this list because I've never seen it on here, and well, maybe a few times, but it's on here now. Very, very rare. But it's currently at $27.33. We have a put strike price, so people are betting against this, betting it's going to get to $25 within about 20 days. DT, the days till expiration, so right around October 21st. So very low open interest, only 5,800. Now we've got a lot more interest of about 49,000 in volume. So that's huge. And then Tesla, this is the first one that's currently active on this list. We have a $300 call strike price. Tesla's at $265. So majority of investors going into Monday are bullish with Tesla, but they're bearish with Apple. So with this $300 call strike price has a 29,000 in open interest and now a 48,000 in volume. So we know that this is not selling activity, this is buying activity. They're adding more to their interest. And so rather than knowing that maybe they're dumping it, afraid going into the weekend, they seem more certain that Tesla is going to be bullish tomorrow morning. So food for thought there. Next one is Sophie. Sophie is currently at $4.88. We have a $5 strike price going into Monday. This one expires this coming week on the 7th. And it had a very low open interest as well, only 7,000, and now a lot of volume at 40,000. So that's quite a bit. And then the next one is Alibaba, which is very interesting. We have a $180 put strike price, and Alibaba is right around $80, so it's way in the money. And with 111 days until it expires, or next January on the 20th, has 16,000 in open interest, and now it has more volume adding into that, about 38,000. So, and then last but not least is the KGC, which is currently at $3.76, but we have a call strike price at $4.50 that expires this December 16th, approximately 76 days from now. However, this is one which is kind of the opposite compared to the other ones that we've seen here. 43,000 in open interest and now 35 in options volume. So again, we don't know. Maybe they're dumping it. We don't know until maybe we see what it does on Monday to see if this accumulates, if it adds to it, or is it subtracting? Did they sell it, or are they buying more to add to it? We shall see as we do more due diligence throughout the week. And so, yeah, there's a lot more activity going on with these. So it's going to be very interesting to see what tomorrow morning is going to be like. And so, anybody have any questions or want to bring anything to the table? Feel free to unmute. Or if you have any questions, feel free to mention it. Otherwise, I'm going to assume everything makes sense and you guys are ready to rock and roll. Hopefully everything makes sense, because again, if it doesn't make dollars, it doesn't make sense. And so we got to be able to always learn, because the more you learn, the more you earn. And so if you ever have any questions, feel free to message me or just a message in the chat room. We're always available 24/7. So thank you guys very much. We will see you next week.